Welcome to The Explainer. Today, we're diving into a company that is literally standing at one of the most fascinating crossroads in modern business. I'm talking about Alibaba Group. Look, just a couple of years ago, if you heard the name Alibaba, you almost certainly thought of one thing, right? China's absolute, undisputed e-commerce giant. But today, well, they're risking everything on this aggressive, high-stakes pivot to become a global AI-first powerhouse. And as you'll see, a transformation of this magnitude is generating some serious turbulence. We're going to unpack exactly how they're navigating this monumental shift, the staggering costs involved, and the severe headwinds that are threatening to blow them completely off course. Okay, let's dive right into this. Here is our roadmap. We'll start with part one, the big AI pivot. Then in part two, we'll examine the financial trade-off. Part three covers selling assets to fund this whole journey. Part four navigates the legal storms they are facing. And finally, part five, the market's verdict. All right, kicking things off with section one, the big AI pivot. Let's take a look at how Alibaba is redefining a giant from the ground up. The sheer scale of the identity shift we're witnessing here is staggering. The old Alibaba was built entirely on e-commerce dominance, warehouses, logistics, consumer retail. And while that e-commerce space is definitely still generating huge revenue, the new Alibaba is laser-focused on cloud infrastructure and artificial intelligence. They're setting some extraordinarily aggressive targets. Over the next 5 years, Alibaba isn't just trying to lightly participate in the AI boom. They are targeting over $100 billion in combined cloud and AI external revenue. They are literally transitioning from moving physical boxes to powering the digital brains of the future. And this brilliantly illustrates the kind of momentum they're capturing right now, both globally and domestically. Alibaba has open-sourced 460 models, which has spawned over 300,000 derivatives. Recent reports actually show that downloads of their QN large language models have surged past those of Meta and Google. But perhaps the ultimate validation? Reuters reported that Apple has officially partnered with Alibaba to train a China-specific large language model, basically bringing Apple intelligence to Chinese users. Pair that with a brand new strategic agreement to power the AI and semiconductor push for China's wealthiest province, Guangdong, and you can see this pivot is executing at the highest possible level. Moving right along to section two, the financial trade-off. Because, as you can guess, building a global AI ecosystem takes immense capital, and that means making some pretty painful short-term sacrifices. The financial reality of this transformation is incredibly stark. On the top line, the revenue engine is still humming along. Full-year revenue hit an astonishing 1.023 trillion RMB. To put that into perspective, that is over 148 billion US dollars, representing a 3% growth year over year. But here's the kicker. Operating profit didn't just dip, it absolutely plummeted by 64%. That is a staggering drop for a company of this size, and it's happening because Alibaba is pouring colossal amounts of cash right back into AI and cloud reinvestments. So why the huge drop? Well, CEO Eddie Wu hits the nail on the head right here. He states that their full-stack AI investments have moved from incubation to commercialization at scale. This 64% drop in profit, it's not an accident. It is a deliberate, highly strategic sacrifice. They are consciously choosing to bleed short-term profit today in order to secure long-term global AI dominance tomorrow. But here's the thing, that sacrifice is already starting to pay off. Their cloud division was the standout performer, accelerating to 40% growth. That's the fastest they've seen in 9 quarters. AI-related product revenue is delivering triple-digit growth and now accounts for substantial 30% of cloud's external revenue. That translates to an annualized run rate of about $5.2 billion just from AI products. Plus, they actually expect AI to cross the 50% mark of all external cloud revenue within about a year. All right, section 3, selling non-core assets. To keep the furnaces burning on this massive global AI engine, Alibaba has to trim the fat and streamline the ship. And that brings us to a rather eye-popping number, $1.5 billion. According to Bloomberg, Alibaba is in advanced talks to sell its gaming unit Lingxi Games to the Asian private equity firm TrustStar Capital. What makes this $1.5 billion valuation so notable is that earlier reports suggested Alibaba might have to let the studio go for as low as $1.3 billion. Instead, TrustStar has reportedly outbid other video game makers, giving Alibaba a really nice premium on this asset. The why behind this sale is actually super clear, and it perfectly illustrates their current mindset. It's all about radically simplifying their portfolio. Alibaba is shedding non-core assets, like a gaming studio.
so their management can intensely concentrate their capital and their focus entirely on the future. And that future is cloud, AI, and quick commerce. Honestly, if an asset isn't directly feeding the new AI-first identity, it's getting sold off to fund the divisions that are.
Which brings us to Section 4, legal and regulatory storms. It's absolutely crucial that we look objectively at the severe headwinds threatening this transformation, because the legal challenges are mounting fast. We saw a really rapid succession of threats during the summer of 2026. First, the U.S. Department of Defense added Alibaba to its 1260H list on June 8th, effectively classifying them as a Chinese military company due to alleged military-civil fusion contributions. Now, Alibaba immediately responded by filing a federal lawsuit against the Pentagon to be removed from that blacklist. Then, just weeks later, on June 24th, Bloomberg reported that the major AI company Anthropic accused Alibaba of illicitly accessing its Claude AI models. The core allegation there is that Alibaba used thousands of fake accounts to run unauthorized distillation attacks, essentially using Anthropic's tech to train Alibaba's own AI models. Following that news, the stock took a 7.4% hit over the next 2 days. All of this culminated in a securities class action lawsuit filed in New York, Wistison v. Alibaba Group. The complaint basically alleges that Alibaba and its CEO made false statements by failing to disclose both the risk of that military classification under U.S. law and the alleged ongoing distillation attacks on third-party models. Now, we really need to emphasize here, these are currently unproven allegations. They are not established findings. However, with multiple law firms investigating and an October 5th deadline for investors to join, this whole situation triggers some very real reputational, regulatory, and financial risks for the company. All right, let's wrap things up with Section 5, the market's verdict. So, how is Wall Street digesting this crazy roller coaster of explosive growth and equally severe risk? Well, despite those legal storms and that massive 64% drop in operating profit, the stock has shown some really remarkable resilience. Shares bottomed out around $92 in June during the absolute height of the Anthropic and Pentagon news. But by mid-August, they had rebounded beautifully to approximately $123 per share. And analysts are definitely taking note. Susquehanna boosted its target to $185, and the broader consensus right now is a moderate buy with a target hovering near $187. Clearly, the market is seeing the underlying value of this AI pivot, even through all the turbulence. But the ultimate short-term test is looming right around the corner on August 20th, when Alibaba reports its quarterly earnings. And honestly, the expectations perfectly capture the tension right now. Revenue is projected to climb another 6.32% to almost 269 billion RMB, but adjusted earnings per share are expected to drop by almost 31%. The market completely expects continued top-line growth, but they also know this AI reinvestment is continuing to heavily pressure profitability. With options markets pricing in a highly volatile 5.7% swing in the stock price, the stakes for this specific earnings call literally could not be higher. Which leaves us with the $100 billion question. Will this great AI gamble actually pay off? Alibaba is executing what is undoubtedly one of the most ambitious corporate pivots in tech history. They are literally trading today's e-commerce profits to build tomorrow's global AI and cloud infrastructure, all while navigating intense legal crossfire and international scrutiny. As we wait for those August 20th earnings to see if cloud monetization is accelerating fast enough to justify this incredible cash burn, I'll leave you with this to ponder. Is this the brilliant, visionary reinvention of a tech titan, or is it a wildly costly miscalculation in an unforgiving global market? Thanks so much for joining me on this explainer, and definitely keep your eyes on those numbers.